Hello and welcome to In Depth. I'm Tina Jha. The Modi government's flagship tax reform, the goods and services tax, completed 1 full year of its implementation on the 1st of July. On the first anniversary of the GST regime, Prime Minister Narendra Modi hailed the tax as a tool that has brought growth, simplicity and transparency. The Finance Ministry described it as a fitting tribute to the spirit of cooperative federalism. Companies have also given the GST regime a thumbs up. The new taxation structure subsumes more than a dozen central and state taxes, thereby making it easier to file tax returns and improve the ease of doing business. But in the past year, there have been multiple issues with GST compliance. However, a majority of them have been resolved. Early day jitters have given way to acceptance that the single tax system is working. In today's edition of In Depth, let's look back at the GST journey so far, its successes, failures and the way ahead. So the goods and services tax completed 1 year of implementation with several hits and a few misses. Post GST, total registrations increased from around 65 lakh to a whopping 110 lakh. Starting a business has become easier. Transactions have become transparent. From returns to refunds, everything is online. The last 1 year has also seen inflation under control. But sectors like real estate have been adversely impacted post-GST. The implementation of the goods and services tax marked a significant indirect tax reform in the country. When it was introduced on the 1st of July 2017, the basic idea was to remove the multiple tax system in India. Before GST, businesses in India paid a range of taxes to the centre and states. This arrangement had advantages and disadvantages. It generated revenues for state governments and allowed them a degree of financial autonomy. On the other hand, it created confusion for companies, slowed movement of goods from one state to another, while allowing tax evasion due to weak supervision. GST changed all that. All central and state taxes were replaced by a single countrywide tax levied on all goods and services, and India became a unified common market. But after the implementation of GST, small and medium enterprises faced troubles understanding and adopting the necessary requirements to comply with the new system of indirect taxation. Filing 3 returns in a month, registration rules and complex refund rules were some compliance issues that worried businesses. But with time, the government addressed various issues proactively.
We have one rate for one product throughout the country. That was the main purpose, and that is certainly there. It's a one rate for one product. But I would say that over the year, the GST Council has shown a willingness to look at problems and resolve them. I don't think we are over that worst. I think there is still evidence that small industries, small shopkeepers, distant towns are still facing problems. And we have seen reports about the difficulties that they've been having. So there is still a lot of work ahead and a lot of work on simplification of the GST is still required. We need to reduce the rates. I see that Mr. Subramaniam, the outgoing Chief Economic Advisor, has recommended get rid of the 28% rate, keep a few products with cesses in the luxury brand, and try and centralize around, say, the 18% rate or something like that.
India is not the only country with problems in GST compliance. Many countries that follow a single tax system have had their share of problems. Comparatively, India has been able to overcome difficulties at a rapid pace. Before GST, long queues of trucks and containers could be seen at every state border. Checkposts at borders had become centers of corruption. There was no strict system to check tax evasion. Goods and services were costlier due to multiple levies. The number of registered businesses were very few, which resulted in loss of revenue for the government. In the last 1 year, registrations have crossed 10 million, which means more businesses are signing up for GST. According to the Central Board of Direct Taxes, more people are filing income tax returns after the implementation of GST.
We now have a one uniform rate across the country. There's no variation between the states. Secondly, we have, instead of having varying rates of interest, varying rates of taxation. Now we have 4 slabs. All items have been clubbed and put under 4. Either you are 5%, 12%, 18 or 27, though we do have some items at 3% and 0% as well. The income from the revenue which comes to the states and the center from GST has crossed the 1 trillion mark a month, 1 lakh crore, which is a very good collection. And going forward, it looks like as with the compliance rates increase, the revenue from it, which will be considerably more than what it was when the taxes were several and the rates were many.
The introduction of GST has led to digitization, making adoption of technology necessary for all, and thus increasing transparency. The government says GST has significantly helped in curbing corruption. Besides, the EWay Bill ensured easy movement across the state borders, helping in increasing productivity. Bureau Report, Rajya Sabha TV. GST is the biggest tax reform in India post-independence, and its efficient implementation was a big challenge before the government. Modelled on the philosophy of one nation, one tax, GST put an end to over a dozen indirect taxes, while making all small, medium and big businesses digital. However, there still are many challenges waiting to be addressed. Here's a look at the issues and the measures taken by the government to resolve them. When the goods and services tax was rolled out on the 1st of July last year, there was much skepticism about its impact. Officials to entrepreneurs to common people, everyone had their doubts. But in the first year of its implementation, GST has proven its benefits to the business community, notwithstanding some challenges, the biggest one being compliance. To simplify the compliance process, the government is coming up with a new single GST return form, since multiple registrations are posing problems for traders who have to face multiple audits and assessments and have to register separately in different states.
I would say that over the year, the GST Council has shown a willingness to look at problems and resolve them. I don't think we are over that worst. I think there is still evidence that small industries, small shopkeepers, distant towns are still facing problems, and we have seen reports about the difficulties that they've been having. So there is still a lot of work ahead, and a lot of work on simplification of the GST is still required. We need to reduce the rates.
While merging multiple taxes and cesses under GST has spelled relief for both the business community and common people, it has also led to the imposition of an additional cess in many states. The GST compensation cess is an additional cess that is levied on certain notified goods in addition to the GST applicable on it. It was meant to compensate states that are heavy on manufacturing and faced revenue loss due to GST. This additional cess was levied on luxury goods, automobiles and many other goods. Importers are also facing issues with refunds. Due to complications in the data matching law, the exporter's refund mechanism is proving difficult, especially for smaller entities. The government, however, is making efforts to address the issue.
The intention was to have one tax system in the country all through. Like the direct taxes is one, so indirect taxes were many. So to have one common rigid system. I think in all this we have achieved a fair amount of success. We probably still have, I would say 4 tax rates is too much. That needs to be brought down to 2 or 3. Maximum 2 I think should work. And this 27% tax rate probably needs to go. And what needs to definitely go are the cesses which are being imposed on various items above the 27% rate.
Several goods are still outside the ambit of the GST, like electricity, liquor, petroleum products and real estate. Natural gas and aviation fuel are likely to be brought under the GST net. Most states, however, are protesting against bringing petrol, diesel and kerosene under GST for fear of losing a major chunk of tax revenue.
When we started, we put in a system which was too complicated for a market economy which is not that complicated. A lot of our small shopkeepers, etc., operated on a cash basis. They did not have complicated accounting systems. And we brought in a system which was very complicated. Invoice matching, things like that. Everything had to be done on the internet. You had to put up your returns only online. Now, that was too sophisticated for an unsophisticated market system.
The government is analysing several data sets in detail to resolve issues with GST. The EWay Bill has been designed to obtain invoicing information. This will enable the government to identify the areas and analyse their data to prevent any loss in revenue. The government is also working on addressing inconsistencies in the amount filed in GST returns and amount mentioned on the EWay Bill portal. The government implemented EWay Bill system for easier movement of goods from one place to the other.
I think all the items are not yet covered. We need to bring in items like petroleum products and electricity also under the GST fold. These two items or two or three items still constitute a fairly significant portion of expenditure in the country. Today, the rates for these vary from state to state, and they continue to have the cascading effect. That means tax over tax is being paid.
GST has given a big boost to the ease of doing business in the country and has benefited both small and big businesses by providing a single tax system across the country. Bureau Report, Rajya Sabha TV. Time for a very short break on the program. We'll be right back.
On this edition of India's World, we will analyze FATF's move.
Compliance of Pakistan with anti-money laundering as well as curtailing terror financing has been poor.
Cumulative evidence coming from a number of quarters that arguments are being devised on grounds of difficulty, but in fact the reason for non-compliance is a systemic mindset of denial.
Given the conditions under which the new government will take office, it's going to be largely driven by the military largesse, whether it is political or whether it's economic.
Rajya Sabha TV's YouTube channel has just crossed a new exciting milestone. It now has over 1 million subscribers. That's more than 10 lakh people who like and want to watch RSTV. Over 15 crore people have watched our videos. Our online viewers are also engaging with us more actively on YouTube. More and more people like, share and comment on our videos. We thank you, our growing tribe of RSTV viewers. We will strive every day to bring you more exciting and engaging content. So stay tuned to Rajya Sabha TV.
Welcome back. You're watching In Depth on 1 year of GST. The Goods and Services Tax Law became one of the most discussed issues in the country after it was implemented. While several parties supported it, some expressed reservations against it. But despite the apprehensions, the bill was passed. In this report, let's understand the provisions made in the GST law for its implementation.
Tax reform has been a priority for the last 2 decades, but the UPA couldn't get the goods and services tax passed in Parliament. It was only after Modi-led NDA government came to power that it managed to pass the long-delayed constitution 122nd Amendment Bill 2014 on the GST in 2016. This marked the much-awaited rollout of the landmark tax reform. Parliament passed 4 bills to implement GST. They included the Central GST Bill 2017, the Integrated GST Bill 2017, the GST Compensation to States Bill 2017, and the Union Territory GST Bill 2017. These bills that were first passed by the Lok Sabha got the Rajya Sabha's nod, with the government successfully stitching together a political consensus.
खास लक्ष्य तो यही था कि सारे हिंदुस्तान में हर एक चीज़ पे एक ही टैक्स हो। पहले क्योंकि हर एक प्रांत का सेल्स टैक्स हुआ करता था, तो हम यहाँ दिल्ली में कुछ इतने पैसे देते थे टैक्स के, और आप हरियाणा में जाओ तो दूसरी रेट थी, इस तरफ यूपी जाओ तो तीसरी रेट थी, तो उस तरफ मध्य प्रदेश जाओ तो चौथी रेट थी। तो उससे कुछ हेरा फेरी का भी स्कोप रहता था, मगर फिर भी इनएफिशिएंसी आती थी।
The GST Constitutional 101st Amendment Act 2016 contains provisions that are necessary to implement the GST regime. The Act replaces all indirect taxes levied on goods and services by the central and the state governments. It is aimed at being comprehensive for most goods and services. Before this amendment, the power to levy tax was split between the centre and the states. The Amendment Act contains 20 amendments. To make the effort more comprehensive, the law also created a GST Council that comprises the Union Finance Minister and representatives from each state government. In acting as a nodal agency of sorts, the Council can recommend many things. For example, the list of taxes that will be subsumed by the GST, the goods and services that will be exempt from levy of tax, the rates at which tax shall be levied, and so forth.
I think we made great progress in our indirect taxes regime in the country. We now have a one uniform rate across the country. There is no variation between the states. Secondly, we have, instead of having varying rates of interest, varying rates of taxation, now we have 4 slabs. All items have been clubbed and put under 4. Either you are 5%, 12%, 18 or 27, though we do have some items at 3% and 0% as well. But this is relatively simplified compared to what we had earlier.
Special rules were made for the supply of goods and services. Under this, basically a tax can either be origin-based or destination-based. Origin-based tax or production tax is levied where goods and services are produced. Destination-based tax or consumption tax are levied where goods and services are consumed. Several states raised objections to the implementation of GST, forcing the centre to agree to a formula for compensating them in case of a loss of revenue. The 14th Finance Commission advised the centre to provide 100% compensation to the states for their revenue loss after implementation of GST for the first 3 years.
To have a tax system which was uniform throughout the country. We would not know if I bought something, I did not know how much I'm paying in tax. Now I know, because all taxes are collected on the bill. There is no separate excise duty which was included in the price. In the old days, the excise duty would be included in the price, and the shopkeeper will add the sales tax. Now, the excise duty is no longer included in the price. It is part of the GST system. So there's much greater transparency and clarity on how much you're actually paying.
Under the GST system, even taxpayers can be rated on the GST compliance rating. This will be irrespective of nature, size or turnover of the business. This rating score is updated at fixed intervals to be made public. Bureau Report, Rajya Sabha TV.
An important part of the GST is the EWay Bill. EWay Bill in the country is important when goods worth more than 50,000 rupees are transported from one place to another. Let's find out what is the EWay Bill and what are its uses.
The EWay Bill or the electronic bill has been the point of discussion ever since the implementation of GST. In common parlance, it can be seen as a token that can be generated online to regulate the movement of goods. Further characteristics include that it is accepted across the country and helps the transit of specific consignment or movement of goods from one place to another, either interstate or intrastate. It becomes in a way proof of the goods sent, the tax applicable on that, and the commercial permission to move goods from one place to another.
Basically for transportation of goods, that I'm sending goods and I'm basically, the EWay bill will say these are goods on which GST has been deposited, registered, and otherwise what the intention is, it will stop all the queuing up of trucks at the borders between states, which used to happen. Now that I have a uniform tax rate, there is no reason why I have to see what are you carrying across my state boundary, provided I know that it is a tax-paid good.
EWay Bill is also necessary for the transit of those items that do not come under the GST. In this bill, information about the supplier, transporter and recipient information is given. If the value of goods sent is more than 50,000 rupees, then the sender has to enter the information in the GSTN portal. The bill will contain information from the seller about the contents that are sold. The buyer in return will have specify on the GSTN portal the goods he has purchased or rejected. If no answer is given, then it will be assumed that no good has been purchased.
Problem of the EWay bill is that there are a lot of people who are outside the GST, like handicraft producers. And they may start facing difficulties in getting their goods across, because the truck operator will say, if you don't have an EWay bill, I will not carry it, because my driver will be stopped all the way. So they'll have to resolve some of those issues about handicrafts and things like that, which are outside the GST net.
To send an item from one state to another, it is necessary for suppliers to generate e-bill. After the bill is generated, the duration of its use is fixed. If the transit of goods is within 100 kilometers, the bill is valid for only a day. For a validity of 3 days, the distance is between 100 to 300 kilometers. 5 days, 300 to 500 kilometers. 10 days for 500 to 1000 kilometers. And for over 1000 kilometers, the EWay bill is valid for 15 days.
The EWay bill is for movement of goods beyond 10 kilometers, and if you're carrying goods worth more than 50,000, a very good concept that the trucks, the carriers do not have to stop at city borders, they do not have to stop at national borders. You have declared what you are carrying, you have declared where you are going, you get an EWay bill, it gets into the portal. Everybody who has access on the way can, without stopping you, knows that your EWay bill is displayed.
During the transit, if the vehicle meets an accident, then it is obvious that goods have to be transferred to another vehicle. It is important to generate a new bill with new vehicle information in this case. The EWay bill has complete information of the GST applicable on the goods. Tax officials will know whether the GST on the goods has been paid or not. The entire system will help in curbing cases of tax evasion. The government claims that through EWay bill, all the issues related to freight from one state to another will also be resolved. Bureau Report, Rajya Sabha TV.
And that's it from us in this edition of In Depth. We'll see you same time tomorrow with a comprehensive view on another subject. You can also watch our episodes online on YouTube and Twitter and share your feedback. Thanks for your time.